The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, nice to be back. Basil Chapman, Tiger Technicians Hour, and I am the fourth hour. Let's see, we've got 8 o'clock to 9 o'clock. You got John Logan. You got 9 o'clock till 10, Larry Pesavento. 10 o'clock till 11, you got Tom O'Brien. I come in 11 to 12 with the Tiger Technicians Hour. And then straight after me, you've got Daryl, you've got Dave, Daryl, you've got Steve, you've got Dave. I'll get that right. Daryl, Steve, Dave, and then you've got Tom O'Brien. So let's get into the numbers. Dow's down 81 at 17,608. S&P is down 2 3/4 at 2101. Comp index is only down 1 at 5126. VIX index is up 63 at 1275. We've got the E-minis down 425. Here's the pattern. This is the symmetric triangle that it's trying to challenge. If it breaks above, let's give you 20 today, right? 2109, that says it's breaking that resistance. And if it slides underneath 2087 is the E-mini, the September, it suggests it's going all the way down to test the uptrend line, and that'll be somewhere at the 2074 level. And you remember, I'll talk about it in a moment. You've got the arch formation and the 200-period exponential moving average in the E-minis right in the 120-minute chart. Testing, broke below it, sitting at 2093. That's right on the line there. 200-period moving average was resistance, then was support, and now it's the support that's going to be very important. Now, let's do a couple of things. I want to move this away, make it smaller. It's the 120-minute chart. If I've done the notation, you'll see it right here. Daily chart, if you're looking at the fabulous Tiger TV, you'll be able to see as clearly as possible that on the left here, I've got the daily chart. In the middle, I've got the weekly chart. On the right, you've got the monthly. And the 120-minute chart is sitting in the corner. Let's do the numbers. Dow, INDU, down 80 at 17,609, making the second arch formation. Remember those H patterns, lowercase h pattern, formidable pattern. Look at the weekly chart. Let me move this a little bit so that let's look at the bigger intermediate term. Starting a new month, it's very important. Look what happened last month. Closed under the 9-period moving average in the Dow. That's at 70,786. And that's the second week in a row. And this is the third week. And if there's a close under 17,000, let's call it 17,770 this week. And in fact, if there's a low that goes underneath 17,399, that'll be hinting very strongly that the H pattern is formidable and that you're going to continue to make lower lows and lower highs. A pop to the upside that takes you into the 17,990, 18,030 area at any weekly close suggests that you're just going sideways in a trading band, taking time rather than price. But the monthly chart has made a decisive peak, G/C. I could actually call that, if I went to the diamonds, which is the trading vehicle for the Dow, that in fact has already gone to a peak E. That's the way I'm counting it there. So in essence, with that instant restart back in the summer of last year, that was in September. Going into September, I have 157.06. That's a peak D. And we were within 3 bars, you went right in and broke out. So that could be an instant restart, A, B, C, D, E, or maybe we're in A, B, C, even D. No matter how I count it, the Dow Diamonds is giving me the clue that we've got to be very cautious here until you see, let me go back to the Dow, until you see those 18,000s being traded again. At this particular point in the mid-17,000s, you've got to be real careful. And that's why our bias has been to be negative. We did add a small long position this morning on a very low price stock. We'll see what happens. Okay, let's continue. And so those are the parameters there. The S&P S&P is holding nicely above the 9-period moving average. It's at 2102. The moving average is at 2101. And I shouldn't say nicely, it's holding above it. But there again, the H pattern is quite formidable. And the weekly chart definitely has the pattern that says that was a rogue wave spike to the upside. They went to 21.34.72. No, 21.32.85. I meant to say that because that's written right there. Just missing the previous high, and that's suggesting that this pattern that we're looking at here has got, at the end of the week on Friday, unbelievable numbers of clues are going to be given. We'll know more about the final key sector stocks that are giving earnings reports this week, how they're doing, how they're going to impact some of the key sector indices, ETFs. We're going to see whether or not the S&P takes out the 2090 support and starts to close lower, making that H pattern that I'm talking about, or if it recycles, hey, you could get a 1 to A to B equals C to D, that extension that would say to you, okay, we're going to go test that trend line right there, and that trend line would take you all the way. If the S&P can close over 2122 this week, but any day this week, it's going to suggest 2122. Yeah, anything over 2116s would be very positive, but 2122 says, hey, watch out. I'm trying to go back to the upper range rather than stuck here in the middle range. But more importantly, I'll just give you the numbers. 2122 on the upside, 2082 on the downside. Break either one of those, and you've got yourself a picture for August that's going to be very telling. Let's continue. You've got the QQQ series. I'm going to do that rather than the comp index, as most people use the Qs. That is a power shares trading vehicle sitting on the 9-period exponential moving average at 112. It's up 5 cents. A close any day above 112.90 to 113.20, anywhere in that range, says, hey, don't dismiss the strength that I've got in that monthly chart. It's still looking good. The weekly chart is holding very well. A close on Friday below 109.70 says I'm going right back to test this up channel support level that takes you all the way to 108.70s. You close, not you, the Qs close anytime in the next 2 weeks in the 107s, and I would have to suggest that on the intermediate term, not just short term, but the intermediate term, the party's over for the upside. But you've still got some support. AMZN, look, Amazon, holding okay. It's up $1.48. It's just kind of stuck in this range. Google. I'm at the Google share instead of the Google L. Let me see if I've got the Google L done there. GOOGL. That's the other trading instrument. Yeah, we've got a peak G/C in the daily. It's really struggling. I would say that peak D in the weekly chart is strong enough to say, just be real careful, because a close in Google trading at 665, let's call it 666. A close below 647 changes the whole scenario. You start to fill the gap. A close over 673 says, I've still got plenty of room on the upside here to try to make a rectangle formation, just trade sideways to up over the coming weeks. The price line, I think I looked at this over the weekend, mentioned for my subscribers to my opening call. Yep, there it is, ABC. It made it. No, don't just guess. That's right. A, look, there's the up arrow. A, didn't I do this before? A, B, and a C. But this C is way below the all-time high of 1,398.76. It's trading at 12.42, down $1.48. So that's just saying this could very well turn into an H pattern right here. Just continue sideways. Now let's look at some of the other aspects that I want to look at. Let's look at gold. GC, gold is down 4.5 at 1090.70. And what's quite important about this is that sideways range is just, it can't get out of its own way as long as the dollar is showing some strength. Even though the dollar, look, the dollar right now, let me just give you the 1-to-1 on the gold that I've been talking about for some time is to this level right here, 1070. We're at 1090 at this moment. but it is 1025. That's the 200 period exponential moving average, which is my intermediate term to long-term goal in gold. It doesn't have to get there. That's just a goal, and that's saying that is the potential target price, not the left side, right side price time match of 918.40, but rather looking at the midpoint right there and going to, I'm saying, yep, the right midpoint of May of 2012 to the right side, which says sometime in September, we should be testing the 1025 level and maybe a little lower. So we could still have a bounce. We actually, on a purely technical basis, I think we're within 2 to 3 days of another bounce in gold, just to continue that H pattern. But I can only call it a bounce at this time. Why? Because if you look at international currencies, if you look at the dollar is not going anywhere right now, but it is not breaking down. It is holding really, really well. And at this particular point, that very long wick candle of last week, which just missed making a 96.29, 96.31, making legs C to the downside. Nice rebound, but those skinny legs, you're going to test 96.92. It's at 97.25 at some point. But most importantly, if there is an upside break, it's going to say 97.77, the high of the 30th of July. I'm not interested in that. I'm interested in retesting the 98.18 last high in the daily, and that would 98.19 would take you to a 98.16 would take you to leg C in the weekly chart. Okay, just a rectangle trading band. We know these very well. EUR USD, let's go there. Okay, same thing, except on the downside, it's a low-level consolidation rather than high-level consolidation, and it's merely trading at 1.09, down 0.001. The euro-dollar currency pair is merely trading between, I would say, 1085, 1.085, and 1.101. All right, just for now. And high-grade copper, wow, look at this. High-grade copper down to a new low, breaking on the weekly chart. That means I have to look at the dollar TRCCI, the Reuters equal weighted ETN, I think it is, broke to a new low here. It's down 3.99, it's down to $1.18, and that's the weekly chart. Remember my rule of thumb in the H pattern, if you take the left side low, that bar or maximum the following bar has to bounce right back and close above the left side low bar. In this case, 407.21. It's at 399.70 now. So this is the second week. It made a new low, and that says, wow, the best you can expect is a bounce to 410 to 412, maybe 414 over the coming 2 weeks. If there is a rebound, oh, that monthly chart. Look, broke the 200 period moving average. This is D. This is leg D to the downside. Could be making a large W formation, which says that sometime at the end of August, beginning of September, that's where we might see gold start to rally and the dollar start to pull back. What am I forgetting here? I didn't think bonds. Good grief, I can't forget bonds. TLT, leg D. Oh, we'll talk about bonds when I get back. Basil Chapman, Tiger Technicians. I'll be right back.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. Dow's down 62, S&P's almost unchanged. This is very interesting. Of course, you got the oils in the Dow, and that's really impacting that sector is very weak. Okay, so I wanted to show you, look, here's the 30-year Treasury bond interest rate yield. 1981 all-time high to current price. Well, that was January 16th. Now it's a little bit later than that. It is, gee, wow, time flies, eh? This is already August the 3rd, and showing the down channel from 1986 and 1987. This is where 1986 really is where the channel itself, not the high. The high was back in September 1981. You know, I'm looking at all these houses for sale, and I'm saying, wow. Those, I was talking to a real estate agent recently, and I said, the clients that you have any of them ever mentioned to you that they've gone into a house to look at and that the owner hadn't actually seen anyone come inside for a year or a year and a half? She says, no way, none of these people have never experienced anything like that. And it's just interesting. You wouldn't believe it, but there was a period, certainly in the 1980s and again in the 1993-94 period, where here in the Northeast, certainly the Boston area, you're lucky to get someone to come and look at your house before they made even an offer. And what they would do is whatever offer, whatever you wanted, they would say, okay, and then they'd come back and they'd offer you a lot less. And then you'd meander, you'd say, not you, I'm saying the person selling would meander and say, oh, yeah, okay, well, no, it's just too low. I'm going to wait and they wait and they wait and wait, and then nobody comes. So the next time the price is down to where that person offered that crazy price, and then they say, oh, I don't know if I can do it, and then finally they give in, and of course that's the bottom of the market. But this is interesting because here the yields are, this is 2.88 on the 30-year. I mean, we were talking 13, 14, 15, some people even paid 15, 16% in mortgage rates back then, and they were buying houses. So it was a very interesting period. I'll talk more about that in the month of August because it's so important right now. The real estate, the whole sector, it's fascinating what's going on. Let me expand this a little bit here. Look at this. You see the black line? That's the 9-period exponential moving average. This is the monthly chart. Look, lower lows, lower highs, lower lows, lower highs, lower lows, and then it goes sideways, and then bap, it goes to a low of 22.26, 2.22%. And now it's at 2.88. And what's happening is that there's a chance that the yield could be making another H pattern, but all you need to see is a break into the 3.4s, so 2.8, 3.4s, and you say to yourself, okay, I wonder if finally this pink long-term trend line resistance, the Chapman wave inside track resistance, is going to be resistance, or whether the bonds, how's this going to resolve in the next couple of months? I'm looking at this, I'm saying, the Fed can say anything they want, economists can say anything they want. What I'm looking at here says quite distinctly that there's still a really good chance that the mantra that I've had for over 12 years, I'm sure, of the Japanization of U.S. bond yields, meaning going down to zero, is still in play. And look at this. Here is the picture of bonds. And what did bonds do? That's why it's so important to always do your homework, always be looking at different levels. Here's the chart. I've lost the chart because Reuters or someone must have bought out the continuous contract from somebody, but I don't have it going back all the way. Thank goodness I've still got that one that goes back in the yields. So this is the actual 30-year UST bond continuous contract. You see this up channel right here? That's really only from 2006. It really goes back way, way longer than that, but I've only got it from 2006. Well, this held, and the Chapman wave inside track support propeller zone is working right now with the 156, called 157 level, up a dollar in the bond yields, in the bonds, pushing onto, and now just fractionally above the 9-period exponential moving average. If bond yields actually go to 160, that's going to suggest very strongly that this market will start to see lower lows and lower highs as money goes back into the so-called safety of bonds and out of stocks. All right, now let's do something else. I want to look at some of the sectors. The sector that I've mentioned to my subscribers so many times, and let me just go through this again. About a week ago, on Monday, you had that very strong up spike. And what I was looking at was that there was a chance Tuesday of another spike, and then by Wednesday afternoon into Thursday morning, there'd be some weakness. You get kind of a doji candle. And then on Friday, you'd either have just a very small range of the weakness or a pullback. And so when I did my update on Tuesday, when I did my opening call session while I was on vacation, I just felt I had to do it. I wanted to give an explanation of what I was looking at and why I was looking at it. And the thing I was really talking about was the fact that we could be making another arch formation in the Dow. I'll be back straight off this. Basil Chapman, 877-927-6648.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Tom O'Brien has just announced a live online workshop taking place Wednesday, August 12th, 6 trades for September. This special event will be open to all subscribers to his daily newsletter, Market Insights. Tom will walk you through 6 trade setups in the market he's identified setting up for September. 2 long positions, 2 short positions, and 2 option trades. New subscribers will also receive a free copy of his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. But we're not done yet. We're also including a Tiger's Den membership as part of all Market Insights subscriptions at no cost as well. You get Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, 30 days of his newsletter, Market Insights, access to his live online workshop, 6 trades for September, and access to the Tiger's Den. This offer is only valid for 2 weeks, so don't miss out. Sign up for your 30-day free trial to Market Insights at the front page of TFNN.com today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi folks, we're back. Basil Chapman, Dow's down 52. S&P is just fractionally a little bit higher, 0.35. This is interesting. Very interesting divergence here. This is a very important period. Why? Because if the VIX index, and I haven't spoken about the VIX index, if the VIX index, which is trading at 12.35, if it stays down in the 12s and maybe even goes to the 11s, there will be enough buying, certainly with new money coming in for August, first couple of days, to allow the markets to move a little bit higher. The reason why I make a big deal about this is that the transports got smashed down from the 167-ish area down to the 140s. In fact, it made 143, I think, low. And now it's trading at 151, trying to hit the 152.40. That is the 200-period exponential moving average in the daily chart. That's the iShares Transportation ETF. And what's important about this is the weekly chart has got a very strong series of 1, 2, 3, 1, 2, 4. So, well, I can't use this week, but it has made a new recovery high. Right as we stand, there have been 3 strong sessions out of 5, but you've been making higher highs and higher lows, and that's really important. The monthly chart still suggests transports are going lower. What it doesn't say is How much lower? Why? Because the technicals were terrible on the previous decline, and yet it only pulled back 20. What did I say it was? About 20 points. 20 points. 20 points. That's what, 15% or so. That's not a big deal when you're thinking of where it's come from, down in the 70s just a few years ago. So this is a well-deserved break, and this counter-trend rally, in fact, could put enough energy into the mix and match where it's helping because enough oil stocks are pulling the Dow down, the Chevron and COP, which is ConocoPhillips. Is that it? No, Chevron and Mobil, MOB. Oh, what happened? So, well, CVX right now is down $2 at 86.33. It looks like it's on its way in the monthly chart. Intermediate term from 86 is going to try to test the 78 level in the 200-period moving average on the monthly chart. So when you look at stocks like that, you've got to say to yourself, wait a minute, such big weighting in the Dow, maybe there's a little distortion. So let's just one more time. Let's go to the QQQQ series. Yep, couldn't do very much so far. Comp index, not doing very much so far. Complex, there are. Yep, so they're kind of stuck, and they're important. The IWM stuck down 30 cents at 122.65, having made a peak. G in the weekly, peak. E in the monthly. I have to call it an E at this point, at least for this moment. This is serious stuff. And now we want to also look at, why did I just start? Oh, XLV, which is what we were looking at before. So the XLV is in the upper range. The weekly chart is still really strong. It wasn't early last week, and then all of a sudden it strengthened. And then the monthly chart is in leg F. Maybe there's an alternate counter. Just for the moment, I'm calling it leg F. The technicals are starting to weak, but they're still 91% in the stochastic. That's huge. And MACD is just starting to flatten out now. So let's look at a couple of stocks within the sector. You've got USH. I don't think I'll finish notating this. No. You've got UHS. Get the symbol right. UHS. Nice, up $1.28 at 146.50 right now. Monthly, the weekly chart. Let me do this real quickly. Pull it back. So the weekly chart is in A, B, C, D. Recycles A, B, C, D, E. In a leg E in the weekly chart, second buy mode. After the pullback that it had late last year into mid last year into early November. And what we're looking at here in the monthly chart is, if I can do this quickly, A, B, C, D, leg E. Okay, I think the XLV is becoming extremely overbought. That doesn't mean to say you have to go short, but I am looking at it as a potential to be turning around. There are a couple of others. We've got HCA. What did I do? THC? I don't remember anymore. THC, weekly chart, peak E. I'm looking at this and I'm saying, all right, go very carefully through. I will do that tonight. In fact, I'll put down here XLV in detail. I'll do that tomorrow. But right at this particular point, I'm looking at some of these areas that are suggesting that we might be getting some topping motion in some of the very best sectors. Question about the XIV. The XIV is the inverse VS, inverse VIX short term. It made a peak F, and everything about the count says, yep, that has to be a peak F. Back on the 26th of June, the week of 26th of June, at 50.10, pulls back quite sharply to 36.95. You're having a rally right now. I would think that the XIV, and let's look at this in a little bit more detail in the daily, needs to just fractionally make, maybe it doesn't have to, but at 49.07, it makes leg D in the daily, and I'm going to have to do this. This is a pattern I've seen so often. It really looks like a heart formation. Of course, I might be influenced right now because having been with my little granddaughter, who just had a birthday, there's that heart formation. We're looking at it as if it could just bounce a little bit more to finish that right shoulder pattern in both the stochastic and the weekly. So XIV could go to 49.07, a little bit higher, maybe double top. Doesn't have to. At 50.10, the high back on the 24th of June. I would suggest that there's a little V-shaped pattern forming here, that if the XIV powers through and gets to 51.50 to 52.10, I have to consider that the Dow has a chance to try to make a new recovery high. No, I'm not going to say that. I'm going to say there's a chance that the Dow could try to test the 17,790 to 17,850 area of the in the weekly chart. That would be based on the weekly technicals. All right, now let's do this back again. So now, and the next thing is the IBB. Now the IBB, which we've actually been short for a long time, is trading now up $1 at 383.68. This pattern, the H pattern, it's already formed one little H pattern. You could still make a larger H pattern. That would become an M pattern if it did that again. But look at the weekly chart. The weekly chart is suggesting the technicals in the MACD are failing. It's suggesting that at 77% and pulling back, the stochastic is failing. So there's not much room for error here. And if any one of the Regeneron, or what's the next one that could be giving an earnings report tomorrow, whatever it is, if any of these just gives a hint of not being 100%, has to be 150%, in fact, in potential for the outlook, the earnings, everything about it, the products, the selectivity of how the FDA is allowing drugs to be not generic in the sense that they can go to everyone for some kind of a disease. It's specific to a specific disease, and to the specificity for patients is becoming tighter and tighter and tighter, the rules and regulations. So I think the IBB is, my thinking is it's done, but it doesn't have to break down. It could go sideways. But right now, my thinking is that the IBB is starting to weaken technically in many time frames, not the monthly. The monthly has suggestions because it's the lowest stochastic at this high and MACD, but I have to tell you, until 375 is taken out in the weekly chart, just that it could go to a sell signal, and really you want 359 has to be hit. 359, and then this IBB is kaput for now. That's my interpretation. This is a technical term. You'll find it under K, kaput. So let's look at, and a break to the upside. If it goes through 393, 395 resistance, absolutely you can make a rectangle pattern and try to get back to the 400 all-time high. But I don't think it's going to do that. So IYR. IYR has, of course, some of the great Simon Corporation, some of the great commercial REITs. These are the malls, etc. And the chart suggests in the monthly that really is more an E than a B at this particular point. The stochastic's fading, the MACD's fading. It's got SPG, AMT, that's American Towers, I believe. So it's got a whole bunch of very, very important stocks that were dividend plays. Now they're not being looked at as dividend plays. They're being looked at as potential weakening stocks. That's the way I have to believe it's. The analysis must be. Why? Because the weekly chart is in leg B, but way down the 75 level. It's up 22 cents. But you know what? This made an all-time high of 83.54. 83.54, and trying to struggle at the 200-period moving average on the daily. Now, this could be an alternate count. We call it A, gray B, and it breaks out above that peak D. So this is E/C. And yep, it could go one more time and try to test again the 75.36 level of the 200-period moving average. I think that it's real close to just stalling here. We'll see very soon, meaning in the next couple of days. Can I look at Netflix? Absolutely. I meant to do that when I was looking at Priceline and the others. Netflix holding very well, upper level consolidation at 114.17, down 11 cents. I think it has the strength to try to double top here, maybe squeaked a new recovery high of 107, all-time high of 117.88. Let me type that in. 117.88. 117. Not 1,017 yet. And 88. Netflix, NFLX. And what's really important about this, I can draw the H pattern, the inverted H pattern right there. I can do a left side, right side price time match. If you are long, I don't know if the question was whether you're long or not, or if you want it as a trade, I think it can go 3 points. If you want to trade 3 points, I think that it has the potential to do that. Okay, there you are, right there. And that says it's got to do it. If it's going to be a left side, right side price time match, it has to get to it by the 6th of August. So that's what, Thursday, Friday. Now, cruise, yep, cruise. So if there's a little political comment there, but it's not. It is an S and 32.40. Cirrus Logic, no, I don't think this is a good chart at all. And it made that H pattern, the inverted H pattern, starting to fail. Now, the question is, would you short? I don't know what the question is. But just to look at it, I'm going to suggest 2 things. One is that huge candle. I remember this huge candle of the week of the 24th of July opens at 32.65. Pow, goes to 37.60. Zip, it goes down to 29.07. And where does it close? Oh, 34.21. So that is outlining for you. Now, this is a different kind of a pattern. You know how I talk about the long-legged wicks in the candlestick patterns? This is a little different. This says that if it trades, if it closes on a weekly basis anywhere in the 32.10 to 31.50 level, this lower half is where it starts to trade. Usually I talk about the whole thing. No, I'm talking about the lower half. If it closes in the 34.90s or higher, that upper half will be traded. Let's go to Victor in Paramus, New Jersey. Victor, how are you?
Good. How you doing? Do you think GLOG will go down to $7 as a point and figure chart says it will? Clog.
Gas Logic Limited. My guess just has to be that this is involved somehow in gas operations. With
it's owned by Goldman Sachs.
What do they actually do?
They own ships that transport gas to like Russia.
So they transport the natural gas. Oh man, that's tough.
Seems like
So are you in a position here? Are you short or you?
No. I was looking because it was an IPO a few years ago from Goldman Sachs.
Yeah, right. Back in 2012.
Yeah, and they pay a pretty good dividend, and I know Biden's son is corrupt, and he's involved with the oil, the gas transportation. So I figured that's where he was going to make their money.
Gas Log Limited, trading at 15.22, down 30 cents. All I can say is based on the chart pattern. The chart itself doesn't say anything about corruption, but what it does do is it says that at 15.22. Okay, well, 15.22, the 13.61 level is the 200-period moving average. The MACD and stochastic are very poor, so it's going to need the weekly. Let's look at the weekly. Weekly chart at this particular point has made the H pattern. This candle, last week was the candle that should have closed above 15.40, and where did it close? It closed at 15.52. So that's done something. So that's just one step, and it says that means that I can say that the upside at 17.40 is a very strong resistance. Sorry, were you talking to me? Victor, so what I wanted to say is you don't have a position in it now. My thinking at this particular point is that the chart says this is the first H formation where the MACD started to rally and the stochastics rallied. It should have had a much bigger rally. On a percentage basis, not bad, 1485 to 1581. You know what I'm going to do? Can you hold on a moment? Oh, Victor, sorry, Victor's not there. Sorry, Victor, somehow you're not there. But what I want to say is I would wait just another day or two. I want to see how it tests $14.85. I'll be back.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
I've always back, happened to glance. I was told to look at the Today Show because someone I know in a group called Sister Sparrow and the Dirty Birds were on, and they just did their thing and looked good, but of course I didn't hear the sound. Hey, bravo, congratulations. Nice group, I like them. Okay, so NG, which is natural gas, looks like it's got that H pattern, the 2.70. I think it's in a ho-hum area. I think it won't break down. I think it's just stuck between 2.7. It should go down to 2.60, maybe even 2.50s, then trade back again. It's just this H pattern that continues to wear you out. If it gets down to the 2.60s, 2.55, I think you can buy it for a trade of bounce, and then you got to start getting out as it moves to the 280s if it does that. This is the only way I can see it right now. I don't like it. So that trade on GLOG, I think, is for the downside. Any bounce I would use as a shorting opportunity. That's my impression right now. That could change, but that's the way it's looking. So, okay, now let's do this. We've got just a short while to go before we break up, and I'm out of here. And you've got Daryl coming on. So until tomorrow when I come back, let me do this. The VIX index, VIX.X. The VIX index is not acting as weak as you would expect with the S&P as it is. the Dow is really a bit of an influence here. So it's up 35 cents, but it's off the high of the day. It's under the 12.86 9-period moving average. All I can say is this, that if there is, now with oil down, the Chevron, etc., COP, what is that, ConocoPhillips, yeah, COP. Sounds like one of those ads. ConocoPhillips, all right. If there's a little bounce, that'll help the S&P, but maybe the S&P could be helped a little bit, but other stocks are starting to break down. So I'm going to make it real clear. The VIX index, the moment, if it starts to trade in the 13.50s over the next 2 days and then holds through an afternoon, it's got to hold into the close and then actually pushes by Wednesday or Thursday into the 1450s at that 200-period moving average, that's fine. But that's the beginning of the week. We've seen Thursdays and Fridays reverse the stochastic very sharply to the downside. We want to have this week, if you're wanting to be short, you want to see the exact opposite. You want to see a strong close in the volatility index to indicate that there's heavy selling coming in, because if there's a trade in the 1220s, 1190s, that's just saying, hey, buying pressure, forget about selling pressure. It's selective, and you've got to continue to be selective. I still think it's selective, but I do believe that we're starting, I'll go through it again. I think the XLV is real close to starting to turn down. That's not a short. I'm just saying, I think that the upside is limited. The IBB, I think it's, well, we could get a big surprise. Maybe Regeneron is so powerful that if it pops 15 or 20 points, sure, the IBB could pop 4 or 5 points, maybe even more. But I think that the IBB is saying, I am kind of done for now. I'm just exhausted of the spectacular monthly move. I need a bit of a break. That's the biotech iShares. So let's make it clear. The Dow, INDU, trading at 17,618. I'd said 2 out of 3 closes under 17,500 would signal that the weekly chart is very serious about going from a sell signal to a sell mode. And that's what we're going to look at. 17,828, 850, close above that in the down. That says, hey, things are not that bad. Now, the S&P right now is trading at 2101. I'll do it again. 2122 is a great move to the upside. 2187 to 2182, not good. It's got that H pattern that says, be careful, I'm starting to weaken. All right, I hope that helps you. My bias for my subscribers has been to the short side. We remain on the short side. And I'll be back tomorrow. Have a wonderful day. Check out my opening call. This is a great time to be looking at it. Stay tuned for Darryl and have a great day.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.